And one of the most tracked stock from the market, from the pharma space particularly, and CDMO space is Laurus Labs. They have guided for better prospect Q1 onwards. So that is something we'll take the discussion forward with Mr. Chava joining us now. Laurus Labs stock has risen from 370 odd levels to almost 425 now. Dr. Satyanarayana Chava is now joining us. Dr. Chava, last 3-4 quarters, the kind of trend has been that your reported numbers on the quarterly basis front kind of have been slightly on the lower side compared to what the street has been estimating, but you have guided for better quarter ahead. This time too, your presentation catches the attention of the street when you have guided for better Q1 onwards and the full year as well. What are those elements which are on the back of which you have guided for better 2025?
Good morning.
Good morning.
What we are going through is the gestation period and the pain of diversification of the company's revenue streams. If you look at 5 years ago, majority of our revenues used to come from antiretrovirals. We have added significant resources, both teams as well as capacities, to diversify that revenue stream from almost 80%, right now it is 50%. The quantum of ARV revenues went up, but the percentage came down. These are the efforts company is continuously investing, and we believe we are at the edge of that efforts, what we have done in the last several years. We have invested in bio, we have invested in fermentation capacity, we invested in animal health facility, we are investing in crop science chemicals, we are investing in cell and gene therapy. All these initiatives have taken a lot of our Capex and lot of Apex also being spent on these initiatives. We have invested this lot of Capex, the depreciation, the finance cost, or Apex cost, all these are putting a drag on our earnings. But if you see our transformation, we are building a very solid foundation for the future. So if you look at our future ahead of us is very interesting, and it is not surrounding our core strength of antiretrovirals.
Sure. No, I just wanted to discuss that future a bit more in detail. You have made the investments and laid the foundation, but I just wanted to go back to the CDMO business specifically. It was a bit soft this time around as well, but the street is hopeful that there would be a turnaround in CDMO. Could you guide us? What kind of outlook do you have for this vertical for FY25?
In FY22, we did very well in CDMO. FY23 was a very good year for us because we got opportunity to supply some COVID-related products. Once those supplies completed, but we have a lot of interesting projects from several big pharma and biotech companies. Those are at various phases of validations. Some of them are very advanced. We are doing validations for their NDA filings. Some of them in phase 3, some in phase 2. So our R&D resources are very busy in delivering these projects. Initially, these projects will be hundreds of cages, and as they move into upper clinical phases, the volumes will go up. So we are at the middle of that growth trajectory. If you ask us, we are very comfortable. We are continuing to invest in CDMO space. We believe future belongs to the companies who focus on manufacturing, especially involving sustainable technologies like continuous flow chemistry, biocatalysis. Those we are doing very good.
Quite interesting. So you've indicated, Dr. Chava, in a Capex of about 800 odd crore rupees, right? If you could just help us understand how the split is going to be within various businesses that you just highlighted.
Most of this Capex is going into definitely bio and CDMO space. In bio, majority of revenue comes from CDMO. So if you consider that all of our revenue Capex is towards what customer are looking at us for manufacturing.
Sure. Mr. Chava, I was just going through your earnings, and if I have it right, the FY24 EBITDA margin was 15.4%, and that compares with 26.4% that you reported in the preceding year. In the coming year, you have guided for a better EBITDA margin performance, but how much better could it be? Could you inch a lot closer to that 26% mark that you had delivered in FY23?
That depends on how much of traction we gain in our CDMO space. Definitely, see, we are not going to increase our Apex significantly. We are not increasing our investments into new areas. All those are done previously. So whatever revenue growth will definitely help us to improve our margins, EBITDA margins. I think we are confident as we guided, EBITDA margins will certainly go up from now onwards.
Dr. Chava, within CDMO segment of yours, we understand a lot of initiatives are going in animal health and also your agrochem CDMO side. By when? When beyond 25? Do you think last quarter of 25 or in 26 will it start contributing, or earning contribution will start?
Crop sciences CDMO will contribute revenues only FY26. Whereas FY25 we see good revenues coming from animal health CDMO. We were supposed to build 4 manufacturing blocks. 2 were operational already. The third one will go operational from June. And fourth one, we started construction that will be useful for manufacturing qualified next year. So this year we see significant growth, and next year we'll also see a lot of growth because we are doing commercial validations. The peak revenues, as we indicated earlier, will come in FY27.
Right. What about your formulation business? There was a very good sequential recovery of almost 17%. How's the trajectory looking here?
Our formulation business is looking good. Similar to our API, our formulation growth will also come from non-antiretrovirals. It is not going to come from antiretrovirals. So antiretroviral business, both API and formulations, we believe it will stabilize around 2,500 crores. And the rest of the revenue growth will come from more margin when compared to ARVs. So other APIs, oncology, other formulations other than ARVs, these segments will drive our midterm growth.
Just wanted to get a sense from you, Dr. Chava. The street is penciling in FY25 is going to be a big growth here, and they're penciling a number of almost 6,000 crores on the top line with a substantial improvement in margins. Just wanted your confirmation if that number is at least closer to what your internal targets are as well.
We expect to do very well. I will leave at that stage. Definitely, see, our investments, what we have done, we'll have to give revenues at some point in time. We believe the time has come for us to deliver numbers. So we have done whatever investment needed for our future growth. We believe, I think things will settling down, and then we started delivering numbers.
Just one last word before we let you go. How are trends shaping on pricing front? Is the price erosion now stabilizing, or improvement will start? The erosion has halted?
I think in API, especially the antiretroviral APIs and formulation, there is a pricing pressure. But the pricing pressure in the last 2 quarters is not worrisome because of softening of raw material prices and then process improvements, efficiency improvements, what we have done. So we expect the price drops are not going to be significant. We will be able to manage that through our efforts in sourcing and efficiency improvements.
Okay, Mr. Chava, great to have you on the show. Thank you so much for taking the time out and speaking with us today. Let's just bring out the stock price as well for Laurus Labs and what it's currently doing and how it's reacting to the numbers, currently lower by about 2%.
If you like this video, then like, share and subscribe to ET Now.